Okay, hello traders and welcome to another Learn It Live webinar. This week, exciting topic, Forex scalping and price action strategies during volatility. And my name is Thomas Atkinson. As always, I'm joined by Ty and Abella of FX Evolution. And I must say, Ty, we are seeing action right now. It seems like a lot of things are starting to move. So what a great night to talk about volatility and also scalping. How have you been?
Most definitely very good. Scalping is everybody's favorite topic. Welcome everyone. We've got scalping opportunities everywhere this week. Actually, it's been fantastic, and we can see a few setting up even tonight. So looking forward to getting into this webinar and going through some of the opportunities that are unfolding now, even in the majors. So some really good opportunities.
So before we start, obviously always need to let everybody know that the information provided or contained in this video/webinar is generic in nature and for educational purposes only. The information does not take into account your personal objectives, financial situation or needs, and should be considered only general advice. If you want to place a trade or anything like that, you may need to seek, of course, independent financial advice if necessary. So Tyrone, the Telegram groups, they've been amazing over the last few months, and Pepperstone and FX Evolution have Telegram groups. If you are not on Telegram, get on there as a trader. It's great to join communities. Our particular one, the FX Evolution one, is all about trading. Everybody gets in there and of course talks about trading, questions they might have, anything like that. And the Pepperstone one is amazing for tidbits of information, a bit of a synopsis of what may have happened overnight or what is happening in the markets, great articles, and of course, a reminder that we are running these webinars and other webinars for Pepperstone each week. So Tyrone will put in some of the links there. So what are we going to be covering today, Ty? We're going to be covering live chart analysis of Forex majors during uncertainty. We're going to be taking a look at day trading setups on smaller timeframes, and we'll be talking about day trading from our philosophy. And I think it's a very good philosophy that's been honed over many countless hours in front of the charts. So we'll talk about that. And then of course, how to identify key support and resistance levels. We believe this is incredibly important for any scalping strategy, and live Q&A with our team at the end. So if you have questions, ask them in the chat room. We're always reading them during the webinar, and sometimes we answer them during it. Otherwise, we'll type it in, or at the end, we'll get to as many as we can. Okay, so economic impacts that are currently moving the markets. There's quite a few, Ty. There's quite a few. Obviously, we've got the virus outbreak. We're still talking about it. Unfortunately, we're still going to be talking about it for quite a while, it seems. Now, while economies are about to reopen in many parts of the world, there's still that possibility of the second outbreak. If that happens, expect volatility to increase heavily. So if we start to see a big second spread, which could force potentially second shutdowns, if that's your belief, or if that does happen, there will be some incredible volatility, and that will mean that we'll see things like the VIX rise, which we'll talk about, and other of course, potential re-shutdowns and harsher rules. And there's all sorts of things that will go on in the finance world from that as well. We've got the government stimulus into the economy. Every day that the Federal Reserve of America or anything else basically comes out and makes an announcement, it is really changing the way that currencies are revalued. So that's creating a lot of shift each way. And it means that we want to be down the smaller timeframes, looking at the day trades, looking at the swing or lower, and possibly even the scalp. So that's interesting. Reserve Bank emergency interest rate cuts, many of those have already been done. We may see negatives, but at this stage, it's probably as low as it's going to be for a little while. And then of course, economic figures that are coming out. So every time you're trading a major pair, if you are trading the pound US dollar, and you're basically looking at scalping it, and you're not aware of a CPI release or a GDP release or any of unemployment or anything like that for that currency, then you are doing yourself a massive disservice. Make sure you are heavily aware of the information. I will stress this throughout the webinar. Do not scalp, do not day trade without knowing what is coming out. Be informed as a trader. And I know it sounds like I'm preaching, Ty, but we have been on the bad end of that, haven't we? As well as the good end, but the bad end as well.
It is, and it's a very easy bad end to get on, because one of the biggest problems, obviously, with scalping is that it's obviously time intensive, in that you're going to spend a lot of time in front of the charts, and the trades actually unfold in front of you, which adds another emotion that day traders, intermittent, medium-term traders don't have to face, which is actually watching the trade in the market, and that can bring about all sorts of craziness. So if you're not aware of actually what's going on around you when you actually first place a trade, it can bring about a certain amount of emotional disconnect from the actual trades that you're placing. So it's one of the toughest, probably psychological levels to break, the scalping one. So knowing what's happening around you in terms of news and the bigger time frame stuff will make a big difference. It certainly will help.
Okay, so advanced trading tips, Ty, during this time. I think looking at larger time frames, even if trading the smaller time frames, this is not just something for this time. It's something that we always talk about. You need to think about everything as money flow. And where are the biggest points of money flow? They're on the daily, weekly charts. And that's where the big guys like Goldman and all the other investors and the big banks, they're pushing money around heavily there. The smaller time frames are where the more nimble algorithms, robots, and of course a lot of retail traders are. So when we understand that, we need to know the trends on the different time frames and break it down. If you're trading a 15-minute time frame, it's still important to know where the support and resistance is on the 1 hour, 4 hour, and we will talk about that. Also, 80% rules. Wherever you expect something to go, right now, Tyron and I and many other traders are seeing that patterns are working out for even less than 80%. It's about 75, 70%, Ty. And we're just not seeing everything go the full way, because remember, pattern or even what you're thinking in terms of the support resistance is a self-fulfilling prophecy, basically. And it doesn't, everyone knows that. And when there's a lot of uncertainty, things are just kind of getting close, either massively overshooting or just coming close, about 70% what you expect, and then coming off. And you want to be making sure that you get those take profits locked in. So do consider that. Gapping, another real problem, especially if we saw a second outbreak. I don't know if anyone here was trading over, of course, the March-April period, but there were significant gaps over weekends. Please be careful. Again, risk management is key to staying in trading for the longer term. And look out for red news and, of course, trading liquid pairs that we'll be talking about.
Actually, that brings us into a question that Carol has asked of us. How many pairs do you look at, and how many timeframes do you look at when you are actually looking for a bit of a scalping stable? It's probably not a bad time to just quickly bring that up, because liquid pairs are definitely one of those ones. Now that we saw that on the screen, you definitely want to be dealing with, especially when you're first starting out and you're building your confidence in the scalping. You want to be doing liquid pairs for a couple of reasons. One, you're going to get your trades executed, straight away without any issues. But also, what you're going to find is with the highly liquid pairs and also the more mainstream ones like the majors, you're going to get better. Apart from the better execution, you're also going to get better spread. They're usually very, very tight spreads. And of course, that's a consideration when you are scalping, because generally your moves that you're looking for are going to be smaller. So you really want to be sticking, my advice, especially at the start, would be to stick probably with the 4 of the 6 majors, and maybe look at a couple of cross pairs off them that relate directly to the majors. That way, you can basically judge the strength off one to the other and transfer if you need to. But don't go too far and wide and exotic especially when you're first starting out, because some of the inconsistencies in those pairs, may hurt you, and it'll give you, a little bit of a confidence knock when you probably shouldn't really have one, because the majors won't do that to you.
Just for Jerry, he explained red news. Red news is highly important news. So if you look at any economic calendar online and you see a whole bunch of different flags or colors next to them, most of them have some kind of color coding. Basically, if it's red, it'll be high impact, and high impact is very bad if you're scalping and you have a very tight stop loss or a very small stop loss. So moving average is tied, 20 moving average. It's the absolute one that we've talked about. If you have a 20 moving average on your chart, you should always have one. Everybody uses it. Everybody in the industries use it. It's very, very popular. 50, another massively popular moving average, and 200. Now we use the SMA, it's because it's a slower moving average. We like to use the 200 to define, I guess, the longer term trend. And we know that the bigger traders do use this one very heavily as well. So they're 3 moving averages that should help you out when it comes to scalping as well as defining trend. Channeling markets, before we get into the markets, in terms of looking at the charts, channeling markets are a scalper's best friend. By able to recognize a range bound market, you can basically start bringing in indicators. So if you recognize, let's say up here, that it was resistance and you'd seen it touch twice, so we had that one touch, two touches, even if we were, this could stay in here for a lot longer than the breakout that we've got over here. So basically what could happen here, maybe we have a stochastic, maybe we have MACD divergence, we have all of those types of things happening at this resistance. We also have a shooting star candle or an engulfing candle, Tyrone. All of these reasons at the point of resistance allow us as a scalper or a day trader to say, okay, we can short this market down to the previous lows. So recognizing a channeling market normally is very, very important. During times of high volatility, the channels don't often last very long though. So that is important. It's more about the breakout. So this point here, how do we deal with the breakouts, and can we be successful at dealing with the breakouts during these periods? So let's now take a look at the market and break down the way that we would approach the market. Let's say if we were coming in for the first day and saying, okay, what kind of opportunities do we see? So the first thing we're always going to do is we're always going to check something like the VIX. And we do this pretty much once a week or a couple of times a week. You don't usually need to check the VIX as often, but during times of high volatility, you will. And the VIX is the volatility index. We've spoken about it in several webinars. If you're not sure what it is, go to Pepperstone's YouTube channel, view some of our previous webinars. We explain it in great detail. So the VIX is still relatively high. In fact, it's very high as a mean or median over a longer time, but 33 is high, and this means that we should be seeing pretty large moves per day, and that gives more opportunity, but also, of course, we need slightly larger stop losses. We need to be aware of that. So VIX at 33, that's the first thing we'd look at. The next thing we'd want to look at is we'd probably go to a daily time frame, and we would have a quick check of something like the US dollar index, and we draw up what we call support resistance lines. And we'd see if there's any clear message that is being shown to us about US dollar strength. Now, the reason we're in the US dollar index is because the US dollar is still the absolute backed, that is the currency of choice. In most pairs you will be trading when you first start are going to be currency pairs backed against the US dollar, Euro USD, Pound USD, US dollar yen, etc. And Ty, what are we seeing here on the US dollar index?
Yeah, the US dollar index is really playing a nice little range game at the moment. There's a couple of good currency pairs that we've been talking about over several weeks in the Telegram group and at the webinars that have been playing this game and given really, really good opportunities. But you can see here, we've got it highlighted in yellow, the two zones that have channeled this one up. Now, you don't have to be obviously a trading champion to understand where this one is heading once it does touch those zones, which I think is probably, when you do understand what you are looking for, the scalping component of it becomes quite easy because you've got very clearly defined targets to go for and entry points probably just as importantly. So you can see very clearly where these ones are. Now, for the most part, we haven't even got indicators on this chart. Like all we've basically got is a support and resistance line drawn, which really does help you, because what we find initially is a lot of people struggle with having information overload with too many indicators on their screen. So they're trying to join the dots with indicators, with price action, with support and resistance. We always find that going back to the simple, just the chart on the screen, some support and resistance is always the best place to start. Now, I can assure you, we start adding indicators to the dollar index, as we can see here. We're going to find some MACD. We're going to find stochastic. We're going to find things that are going to agree with what we're seeing here. There's no question about that. But you're always going to be better off if you can identify it with price action first. That is always the leading indicator, okay? If you can do it with price action, you're always going to have a head start on the market. The indicators do just that. They're indicating what may or may not happen or what the market strength is telling us. But we never trade primarily off what an indicator is saying. We only use them as a guide. Price action is king. And you can see here, when you break it down to a 4-hour chart, it's even clearer to see, okay? So, yeah, they're just fantastic when they're ranging like this, and it's a really good trade.
Hang in there with us, Brandon. He says, no one scalps on the daily, more like swing trading. That's absolutely true, Brandon. It's not a scalping or day trading strategy when you're on this time frame, but it's about being able to recognize the trap in the market. So right now we're looking at the US dollar index and we're saying, okay, it's locked within a zone between this 101 and this 98.81. Now you don't want to be sitting up here, let's say up at this high, and saying, okay, oh, I think this is a great buy opportunity. It's a great buy opportunity when it breaks through and makes a new high. It's not a great buy opportunity if you're sitting here on a 5-minute chart going, oh yes, I'm going to buy, and you're buying straight into daily or 4-hour resistance. So this is the way we break it down, and then we get a clear picture, and then we can begin getting a bias. And it's all about getting that bias. So here's the 1 hour, and Ty, this is where I start to think, wow, it's getting a little bit exciting in terms of what's happening with the US dollar index. So again, we draw up our support resistances, we get a bit of an idea of the breakout that just happened recently, and then we see that there's a decent amount of free space as well if the market gets higher and breaks through this 127. And that's really important because when a market, we know a market's going to gravitate towards this 197. If a market breaks out past this point of resistance over here, it is fair to say that at least it gets to this 178. That's kind of going to be the next level that it's going to push for. And that gives us that bias. So we can then say, okay, well, what do we think may happen on this US dollar index pair? Remember, on an hour now, so there is getting into day trading territory in terms of opportunity. Well, one of the options is this is going to act as resistance. It was resistance before, it's probably going to act as resistance again. The market then could potentially come down and then retest the previous resistances and act as support tie. And this is role reversal. So it's basically a very good opportunity for you then to get involved in the scalps. We are in the direction up. We're making a series of higher highs and higher lows on this time frame. And what if we jump down to the smaller time frames here and we saw a little double bottom, or we saw a hammer candle, or we saw anything like that at a key level on a 1 hour? Lots of traders are going to be with us, and we're going to have a higher chance of success. And that's what we're doing as scalpers or day traders. We are looking for high chances of success. You shouldn't actually be trading 35 times in a night, 10 times in a night. You should be looking for successful opportunities to get in and out relatively quickly, and maybe even to leave more money on. And this is when the next level thinking happens with multi-time frame. If we got in here and our target was here for the take profit, okay, because we were scalping or day trading, but we say, well, we know on the day trade or on the swing trade style, it should go up here to 186. What if we took off 70% of our order here and left the rest on with the strong bias towards here? That would be amazing. So that would absolutely potentially make us a ton more money, but it's realistic because the idea is that you are trading a larger time frame style, but on the smaller time frame confirmations. So sometimes you'll get lucky and you'll be able to hold that 30% and then potentially even add to it during its move. But more importantly, you've got bias during that move. So Ty, I think that's one of the most important and powerful concepts that comes into anything when you're considering any investment. And it took me a long time, and I think it's a work in progress in terms of when you come to that realization.
It is, and then when you eventually get it and you start to understand it and look at the market that way, you'll realize, what you've probably been missing along, because it is a real, key secret ingredient to being able to nail it, I think. And when you do realize how it does work, you'll actually, you'll get a lot of confidence from it. Now, just to quickly address, I'm getting a lot of questions about looking at live markets. We are going to cover a couple of live markets in this one for the things that are appropriate to scalping. But for anyone who's looking to actually look at the more broader market, our webinar will be starting in 40 minutes. So I'll pop the link in the chat window for anyone who'd like to attend, and you can ask and put your pairs in that you want us to have a look at, and we'll try and cover as many pairs in that one. But we're limited to how many pairs we can look at this one, because we've got to stick to the topic and make sure that we cover this area really well in the live market. Okay, so I'll pop that in the window now.
Good question here from Ryan. I'm going to answer it straight away. How far out should you draw support resistance? And basically is the main question here, looking at 300 candles, 400, etc. So what you want to be doing is you want to be looking at what is probably more relevant to the time frames that you're trading. If you're trading a 15-minute time frame, yes, it's good to get a bias on the trend, but at the same time, you're going to be focusing a hell of a lot more on the recent candles, the recent kind of 20 to 50 candles, because they're going to be the most valid. If you're swing trading on a daily, you're going to go back probably a little bit further because you're looking for key zones. Here is the euro tie, and as the US dollar index broke out over here, the euro has broken lower. But I think the euro presented the better trade today in terms of we could easily have gotten a bias from the larger time frames and then broken it down. Firstly, the daily came off a resistance point, engulfed, and then has started shorting off. That is clear to anybody that has looked at these kind of charts. The second thing is that we had a heavy break through the moving averages with a massive retest, which can be shown on this candle here. And as this is breaking through, we have a 20-50 cross on the 4-hour. So if we're a scalping kind of day trading scenario and we're seeing something like this, and we're seeing support here and it looks quite bearish and the support is there, look how the market's interacting with this zone. We can actually jump down to the smaller time frames, 1 hour into 30 minutes, into 15 minutes, and start to draw a clear case of support. Here it is, and here is the support at 108.27 zone. And it broke through this zone, quickly came up and tested it, and then obviously the rest is history. It's come straight down after that point in time.
And let me press the play button that I play every single week for every single webinar. Look at the 20 moving average and how price has interacted with it on every time frame. No matter where you go, the 20 is the most important moving average, and you just can't go wrong when, even if you're just using that. So always have a 20 moving average on your charts when you're looking for a go-to indicator. If it's the only one you're going to use, the 20 is the one we say, because it's the one that is so consistent in the results that will give you in the direction of the trend.
So here we have the support, and we've got two basically main supports here at this 108.27 level. That's the 1-2, okay? So we've clearly got a support in a direction of trend. As Tyrone mentioned, basically the 20 was holding it, was actually making really equal kind of lows with slightly lower highs here. And then it came through, and this is really pretty much our signal in terms of the way you would be looking at a scalp or a day trade. You would signal here. Where would you place your stop loss? Not one point other than over here did it touch the 50. The 50 was holding completely. So the best place to place a stop loss off this kind of confirmation is to say, okay, well, we see the 50, but we also see price action. And the price action is showing us that this was the last swing. So what we would do is we would place in here, and then we would place just above this point here in terms of a stop loss. And this would allow us the necessary room for this trade to move. And your stop losses are going to be slightly bigger right now in terms of pips than they may have been in, I don't know, 3-4 months ago. And that's the nature of the fact that the volatility is in the market. If you're using 5 pip stop losses, you unfortunately will generally get ripped up over time at this period. And we do treat scalping in a little bit more of a day trading style, where you may hold a trade for at least quite a few hours. Sometimes you'll hold it for 30 minutes. Sometimes you'll be lucky and you'll get out in 5 minutes. But generally speaking, you'll be in it for a little bit longer. And that's because I think it's the safest long-term strategy. If you're always looking for 3, 5, 10 pips, especially during high volatility, it happens quick, but it's hard to control your emotions. I mean, we'll talk about that. So this euro, I think it's a classic case of the 1-2. It breaks through and then it comes back, doesn't make a new high above here, which means your stop loss would hold, and we can get that bias from the larger time frames. The other beautiful thing is we can then use large time frame support resistances, and we can say, well, this would have been an incredible target. Previous support, there's been support down here, but really the bodies are kind of down here, and these are our two main targets. So the first target would be around this 107, kind of 75, and the second target would be this 55. And it's just about gotten to the low, and we'll see what happens, but obviously this is the kind of thing that you'd be doing.
Sure. Actually, Brandon's brought up a question that we might just jump straight into. I think the next one is going to be the pound that we're going to look at, Tom. And I know you've got an affiliation with this trade, so maybe you can explain that to him on how this morning was an insane move and how you can notice these in advance. Do you want to maybe bring up the clues that we had on the pound? Because I know you did a little special on this morning in the Telegram group.
Yeah, so the pound is one where, again, we've used a larger time frame to get an idea of the concept, and then we've moved down from there. So here's the 4 hour, and this is kind of, I started on the daily and I looked at the daily, and again, resistance tie, and then we went down to the 4 hour, and I noticed this, but I didn't really notice that fully. What I did notice, it was the kind of the compressing of the market on both sides. So we had this support here, the channeling here, breaking out to the resistance, breaking out to, again, a bit more of compression. And then we move down and we notice that there's this incredible trend line. And I don't usually draw trend lines, but this was definitely there. And the market was respecting it, but it was also continuously testing it more than it tested in the past. When it got through this point, it then basically has absolutely just sold off massively. But notice what this is, Ty. It's a larger time frame head and shoulders. We have a big head, we've got our left and our right shoulder. The right shoulder is lower than the left shoulder. Very important. And this is all on the 1 hour time frame. So this gives us a bias towards direction of trend that we can then use on the smaller time frames to trade within. And we've got a great example on the US dollar yen right now in terms of what we would do. This is where you would get the bias and you would know, okay, the distance is going to be this is what we expect from the break. And then we will trade that bias on the smaller time frames with the scalp. So we would say, okay, well, it comes back like this, whoops, and then goes back down, and then comes back, and then goes back down, and comes back and goes back down. And that's the natural kind of ebb and flow of the smaller time frames. That is what we're looking for, the bias into then looking for the opportunity.
Sure. I've got another quick question that I might answer on the fly because it might be relevant to a few other people in the room. Is it insane to scalp on a 2-minute chart? Okay. Right. It's not that it's insane to trade on a 2-minute chart, but it probably goes on to what we've been talking about in this webinar, that if you get a bias for the direction on the bigger time frames and break it down to the smaller time frames, it doesn't really matter what level you go to. You can go to a 15-minute, 5-minute, 2-minute, or 1 minute, but you've got a bias. Okay, so probably the important aspect of that is not to be getting your biases from the 2-minute chart, but if you want to use your 2-minute charts for potential entry points to use the sharpest price action, then yeah, that's okay. But as long as your bias is coming from a more meaningful time frame. Now, yeah, that could be a 15-minute or a 1 hour in the case of scalping. But yeah, you want to be using just a bigger time frame to verify what you're trying to do on a 2-minute chart.
Okay, I've got another question here from Peter. I'm going to answer it while I leave this VIX information up for everybody to just quickly read. And that's, I have an issues with TPs during scalping. I see trades in profit later come back and it hits my stop loss because I want to do a 2-to-1 risk return. Please, what's the best TP strategy to be using? Well, the best TP strategy to be using is using a larger time frame with a pattern and then trading in that trend towards the direction. And you're taking like the little legs or moves in between that. And by doing that analysis of the higher time frame, you will find that you are more easily able to predict that something will go in a direction. You have the money flow. It brings me back to that point that we said at the start of the webinar. If you have the money flow in your direction, then the rest is easy because the trend will push it there, the pattern will push it there, the larger time frame traders will push it there, and you just go in and out in that direction. And of course, the great thing about scalping is that you can have the higher kind of risk rewards, but also you can get in 5 times on one pattern on a 1 hour or a 4 hour because you're on the 5-minute, 15-minute looking for those little opportunities in that direction. So I think it's really, really good. Talk the VIX to death, Ty, so we'll we'll leave that one to people to go to YouTube and check out if you want to see more. Market gaps, mentioned this before, very important that you understand what they are. And probably more important with scalping is I think reading price action from the standpoint of peaks and troughs, Ty. So being able to recognize that when you see, let's say, a support break and you've got that kind of one touch, maybe three touches, and then it comes through. So we've got the 1, 2, 3, one of my favorite basic little scalping strategies, and it breaks through. That is going to then ebb and flow as it moves and fills towards the next kind of area. So generally speaking, when one support is broken on the larger time frames, it moves, the market will move to the next direction. And your job as a scalper or a day trader is to pick off the little moves in the direction of the fill, and then more importantly, recognize when it's filling that zone. So we do have a live, well, an example on the US dollar yen that we can use, but make sure you can read price action that way. Another one that's not used too much, Ty, is being able to recognize patterns. Now, patterns are controversial on the smaller time frames. Some people believe they don't work in scalping and therefore they only use moving averages and certain indicators. My belief, again, recognize the patterns on the higher time frames and then trade the smaller time frames off role reversal, price action, indicators, those kind of things. Ty, could you put in the room, we do have a free pattern cheat sheet, which you can absolutely download for free by just signing up, and you don't have to do anything else, and it'll send to your email. And then that will give you kind of the main patterns that we believe are probably the best ones to be used for pretty much any market and any real conditions. So make sure you check that out.
Yeah, I'll paste that in now. Just another question. I'm getting a lot of questions about the recording of this webinar. Our Wednesday webinars are always recorded and they're posted on the Pepperstone YouTube channel the next day. Okay, so if you are having a few issues with tonight, listening or whatever it may be, and you want to recap, the replay will be on the YouTube channel. I've had a couple of requests also that, could they post it in the Telegram group? Not a bad idea, and I'll actually put it to the bosses at Pepperstone, and they may look at doing that as well to make it a bit easier as well. Potentially that's something that can happen, but definitely they'll always be on the Pepperstone YouTube channel the next day, the recordings, and also the previous ones, so you can go back and check out ones you may have missed as well.
I've got a question here from Xavier. Can Fibonacci be put in? Absolutely. Fibonacci is great for working out pullbacks in the zone. Remember, we talked about that 20 moving average and how aggressive trends, when they break through, will often come back to the 20. If you get the market coming back to a 20 and then at the same time it's a Fibonacci level and a role reversal level and all these types of things, it's incredibly powerful. So here we've got the US dollar yen daily. Again, we start on the daily. I do this because anyone that's come to any of our webinars recently knows that I've been talking about this support, and I mentioned that a break below this support really exposes kind of this level down here, and it's well on its way. It's already trading almost down to the 106. So we've got this support that is very, very strong. It's then broken through, and when it breaks through, we can get a bias to this to a direction. We already knew the direction was possibly down, but this helps us then say, okay, well, we're only going to take short positions. So what happened this week was we saw this particular candle here on the 4-hour tie, the shooting star, and many people will call it pin bar. Some people call it the correct name, which is shooting star. And this, when it started selling through, gives us the opportunity to get on the smaller time frames and start saying, well, do we see any opportunities in terms of role reversal, in terms of breaks of key support? Can we potentially sell anything? Where do we need to place stop losses, etc.? Then you've got your little zone down here. And what's happened recently is the market has made a new low, and that is the 1, 2, 3. Oh, quickly, 1, 2, 3. And it's come back up and it's tested it. At the same point, it has tested the 20 moving average. And I'm sure if we took a fib of this, which I'll do now, I have not done this. Let's have a look. Get the fib. Yep, and straight in at the 50 Fibonacci at the same time as it hits a 20 moving average on the 1 hour at the same time as where you've got the role reversal. So that's a great level to potentially scalp, and then you can bring it down to the smaller time frames. You see an engulfing candle, well, that's pretty good, and then you get down to 5 minute, etc. But this is the way that we like to approach it. You're breaking down a concept, and then you look at the scalp by using the higher time frames. What do you think about the US dollar yen, Ty?
The US dollar yen is been technically perfect to trade over the last probably week or so now. everything you said is 100% correct, but I think, you know, going back to the most simplistic way of trading, you know, any you know, pair, really higher highs and higher lows, or lower highs and lower lows in the downtrend, this has done that splendidly on any time frame that you like. You'll find the good thing, what I like to see in a pair, and this is why we say, you know, when you stick to the bigger majors, when they do start to move, you get many opportunities. There's not a time frame that you can't go to on the US dollar yen, anything down from a daily, that isn't giving you short signals. So when you're getting so many quality signals, no matter what chart you're on, and when you're doing that, it means that you're not going to miss the move. And when every time frame is really, you know, backing up what you already believe from the 4-hour and the daily, it makes it so much easier to trade. You can see here, this is a 15-minute chart, and all of you who would know, who know Thomas and I well, you know, we only use 15-minute charts for an absolute entry point. Like, that's just, you know, we go there for fun, really, because most of the time the 1 hour is our entry point, but even the 15 minutes doing it. And I know a lot of you out there, I can see in your comments that you think 15 minutes is actually a long-term time frame. Yeah, 15 minutes is pretty much as short as we go, but it's still a very powerful time frame to achieve scalping results. Make no mistake.
I like the 15. But I don't personally like the one.
Yeah. For scalping, it's absolutely awesome. Not only scalping, it's fantastic for actually entering even, you know, intraday, daily, or 3 or 4 day trades. It's a really good chart to actually enter on, because it gives you the first burst of price movement to validate what you're seeing. You know, 5 minutes can do it for you as well. And if you're a really diehard scalper and you're only going for really short and sharp moves, you know, a 5-minute chart can be very useful. But in those instances, you're probably relying more on the 15-minute and 30-minute charts for your direction. Okay, that'll give you your directional bias, because obviously you're not going for a 100-pip move. You're only going for your, you know, maybe 20-30 pip scalps. But the 15-minute is an invaluable chart, but when that is agreeing with the direction of the bigger time frames, like it is on the yen, it's really happy days, and it makes it a very easy trading environment for the experienced and even for the people that are learning.
US dollar CAD here, Ty. I just want to again talk through a concept. So here we've got nice little kind of bullish candle coming through. We've also got multiple different other reasons, but once we get down to the smaller time frames, let's say we go down to a 15-minute or something like that, what we notice is that if we were looking at heavy bases, we definitely do have quite a strong base here. Now, a lot of people ask, where do you draw support resistance lines? You could do literally 3 webinars on exactly the way that we approach it. There is method to support resistance lines, but you really have to have a deep understanding of price to recognize kind of like the key zones and where the key breaks are going to be. Sometimes it's easy, but sometimes it's a bit more difficult. And then when you get down these time frames, you can say, well, is it even worth me considering getting into a trade? So if I'm going to, let's say, take this trade long, if I'm looking for a breakout, it makes sense that a breakout from here, it's going to try to fill to the next level. So when it breaks this zone, let's say it went up here, it will then try to fill to this level. So what I'm looking for is one of two things. As if I'm being patient, I'm looking for the break, come back. If I see a bullish hammer here, if I see an engulfing candle here, if I see anything like that on even the 5-minute or 15-minute time frames, I'm going to try to take it to the fill, okay? And that makes sense because I'm using so many reasons. Remember, at least 3 reasons to be in a scalp, whether that's your indicators, stochastic we had up before, MACD, great indicators, RSI, it's okay, Bollinger Band, great indicator, certain things like that. If we at least have 3 things, and they aren't all indicators that just agree with each other all the time, very important fact, make sure you don't have in your trading system indicators that basically are telling you the same thing. If you have multiple reasons to be in, and at least 3, I would prefer 5, then there is a greater chance of success because you've effectively done your due diligence. If you're buying a business and that business has, you know, okay, it has great staff, it has great products, it has great everything, but their cash flow is horrible, well, guess what? You're going to go bust, because cash flow is the #1 killer of businesses. Why this whole virus stuff is really so badly affecting everything in the economy is because cash flow is gone, and that's the #1 killer, isn't it, Ty? As a business owner, it's the same thing with trading. You want to have as many reasons as possible.
Yeah, definitely. That's right. The more reasons you've got, the more reasons you've got, the more people are seeing what you're seeing, right? And that's probably the key. You know, if there's 5 reasons for what you're doing, there could be, you know, 1,000 traders out there. You know, 200 of them are looking at each of those 5 reasons. All in all, it equates to the same thing. The market's going to move on momentum.
Can you answer
yeah,
Simon's question here, just because it's a question that I think all scalpers should know, and that is, or maybe I'll answer it, is basically that if you are scalping, trade half an hour before an open session, especially London and New York, and trade into that first hour, that is going to be where you see key breaks. That is going to be where you see some serious momentum and kind of volume coming into the markets. And it's probably the best time as a scalper to see those breaks. And there's so many setups that happen during that time. So learn your craft by watching tons of them. Tuesday, Wednesday, Thursday, best days, okay, best days. But that's the kind of thing you want to be looking at to answer that question. All right, Ty, so we talked about having a trading plan, but let's talk about the multiple stages of trading. And I keep using this chart because I think it's pretty funny, but market emotions need to be kept in check, okay? And this is because when you're a scalper or a day trader, it's not so much that it's necessarily incredibly difficult to pick trades, it's the danger of taking too many trades and stuffing it all up. So you might feel at the start of the session that you're like this, okay? You open up, you've got a bit of optimism for the day, you've got some excitement, thrill, you go, wow, I'm so good, I made money, and maybe you got lucky as well on some news event or something like that. And then all of a sudden, the last half an hour or 3 hours or whatever it turns into becomes this absolutely terrifying situation. And as a trader, as a scalper, you do not ever want to be here. You never want to be down here. You want to be pretty much optimistic, but at the same level calm. So you need to be effectively here. If you are always just there and you have the mindset that you can always stay there, then I think scalping could be for you. If you're of the mindset where you run through this all day long, then you really need to start thinking, okay, well, let's try day trading. Let's try swing trading. Maybe it's not right for you, okay? That is what you want to probably think about, because it's not so much that you won't make 10% or 15 or 20% in a week. You could do that, but it's about when you go on your first losing streak, and that will happen. How do you deal with that? And if you've dealt with it poorly in the past, potentially try out other techniques. Okay, sound risk management strategies, all the standard stuff, 1 to 2% of capital. Obviously, you want to look for higher risk rewards. You don't want 0.5 to 1, 0.75 to 1. You need to be honest with yourself. You need to keep a journal and try to figure it out. If you are taking 35 trades in a night and you do that every night of the week, you better do some analysis and see if you can fill some gaps. Maybe there are trades that you are taking that are too risky, or you're taking too many trades. Remember, only taking a few trades in a night, taking 5 or 6 trades or 2 trades, or if you're being smart and being disciplined, you will find generally bigger success. One thing to do is potentially even run a second account with a demo and take the trades, take the best trades that you're looking at and compare. Why not compare, Ty? That is definitely a thing that you can do.
Definitely. Yep, definitely.
So Ty, look, we have the Pressix system as part of our kind of step process, as just part of our course. And this particular system revolves around really pillars in terms of the things that you should be looking at. So price action, risk management, our ELD system, chart patterns, indicators, and charting techniques. It's really important to have that business plan and to have that strong psychology. So we talk about this all the time. At the moment, we do have we're still going to continue running kind of our lockdown special on our main course, which is our foundations course. But the key is to have a plan every time you look at scalping. So to get out of this lesson today or this webinar, it would be, do not, as a scalper, discount the larger timeframes. Go to larger timeframes, create a bias, and then trade that bias onto the smaller timeframes. Look for the breaks with price action. Use the indicators that you're already using. The stochastic MACD, definitely ones that we would say are good. And we've done webinars that are on YouTube to check that out. And then also breaks, role reversal, Fibonacci, bring those types of things in. So hopefully that is helpful. Risk reward system, Peter, we've talked about it a little bit, so definitely check out the YouTube for Pepperstone.
Yeah, we've got risk reward videos on. We've done a whole webinar on the risk reward system. Unless you're referring to the pressing system, of course, that's actually in our course. But we've also got a video on that too. So we've got that on our YouTube channel. So yeah,
okay.
That's
2 to 1 basically just means if you're risking $100, you want to make $200. You never want to make less than $100 on $100 of risk. And that's just, well, I mean, sometimes you'll have to, obviously, but that shouldn't be your plan and it shouldn't be your realistic goal. Everybody usually struggles not with the trigger, okay? Pressing the button and getting in is not the hard part. It's having the quality stop losses and take profits. And again, that's why we say the bigger time frames. It gives you a higher chance of probability of having quality stop loss areas and quality take profit load zones. So if you're struggling with that, think about the stuff that we're talking about in this webinar, because I think it's pretty powerful, and hopefully you guys do too, but it definitely works out for you over the longer term to know what's happening on those larger time frames.
It's so powerful, and like I said, it'll make a world of difference to your short-term scalping. So it definitely will. Now, guys, I know this has been an extraordinarily popular webinar tonight. I know scalping is close to everybody's heart. We love talking about it, and we are in a dead set scalping environment. So we'll certainly pass on everybody's request to do more of this and check out more live scalping in the next couple of weeks as well, because I know Pepperstone have been kind enough with the success that we've had with numbers. Pepperstone have been good enough to extend the weekly webinars. So just keep a note that they are still running weekly for every Wednesday night for the month of May. Okay, so we've continued it on a weekly basis. So feel free to send in any requests that you've got that you'd like us to cover in any of these webinars, but we are going to be very focused on what is actually happening in the markets right now, because there's nothing better than learning on the job, if you like, and seeing the live markets actually play out. So be sure to register nice and early for next week's webinars, and yeah, keep an eye out on the YouTube for the replay of this one if you want to catch up on anything that we talked about.
I'm just going to read out a few things here, Ty, just as, I guess, I'm not going to tell anyone's names, but, somebody here says, I think I made a mistake of starting on the 5-minute, 1-minute charts, lost too much in 1 week. We'll try to focus on 15, 1 hour. Everyone starts on the 1-minute, 5-minute
Everybody
charts.
Makes that mistake.
Don't worry about that.
But
you will. I believe the longer you're in it, the more likely you are to, I call it graduation, where you move to your 15-minute. And I think 15-minute is look, it's scalping. It still is scalping. 15-minute, I know scalping technically 30 seconds, 1 minute in a chart. Consider it a mixture of scalping, day trading. Have a look at those 15 minutes if you're only on the 5. Have a look at that 1 hour. 1 hour 15, nothing wrong with it. It's great.
No, absolutely.
Yeah. And have we ever traded your positions without stop loss? Yeah, sure we have. It's just really bad idea long term. So you will get into the point or the pit of being in a trade that you let go a little bit too long, and then it gets out of control, and then you revenge trade it, and every story that you've ever heard. And look, we've been around long enough to have heard them all, and I don't want people to get into that situation. So consider
we've made all the mistakes for you. So just
we've done that.
come to our webinars, and yeah, you'll learn from all our mistakes, so you don't have to make them. We've done it all.
Let's call it hybrid scalping, 15-minute, 1 hour. To the answer that, John, in terms of the best ones. All right, guys. Well, thank you very much. If you want to come and see us in the next webinar, please do join. Tyron's put the link in there. Remember, get that cheat sheet and make sure that you pay attention to those higher timeframes as well as the small ones. We hope you enjoyed. We'll see you next week anyway.
Thanks, guys. Have a great night. We'll see you very, very shortly.